Hello, everyone. We'll get started in just a minute or so. Please feel free to drop your company information, your name, your information in, and let us know why you're joining and what you're looking forward to today. We'll get started in 1 minute. Well, good afternoon, everyone, and welcome to our lunchtime webinar series. Please feel free to share your company information and let us know why you are attending today, what you're looking forward to learning. If this is your first webinar with us, thank you for joining. And if it's not, many of you I know are joining for your second or third or probably 10th time. Thank you for attending as well. Our goal is always to keep our small and mid-sized businesses and our business professionals informed so that we can bring you relevant topics. And today, our topic is no different. It's really a hot topic, payroll. I have had so many questions related to this topic from clients. In the past 2 weeks, I've had all payroll related questions. So today I expect to be very good. So stay tuned. My name is Sidoni Naismith, and my company is Black Swan Consulting, Inc. Black Swan is a management consulting firm that specializes in strategic business planning, financial planning and analysis, and government for contracting. So we support small to mid-sized, women-owned, minority-owned, veteran-owned enterprises with providing and helping them with creating stunning lender-ready business plans and pitch decks And we do ongoing financial forecasting that lenders like to see. We assist also with getting you ready for government contracting. So please feel free to book your free discovery session if this is something that you feel that you need. Also in the background today is our Black Swan tech team, and they will be making sure that this webinar goes as smoothly as possible. This program is brought to you by Black Swan Consulting, Inc. and the MBDA Export Center, which is operated by M. Gill and Associates. Black Swan Consulting is the management consulting firm in Broward County and East Miami that provides technical assistance to businesses that are facing difficulties due to COVID-19. And now, if you don't mind, we are going to find out what I always do, find out where you are joining us from. So whether it's Broward County, Miami-Dade County, Palm Beach County, Collier County, other counties in Florida, any other states, any other countries. Looks like we're getting a few more votes in. So we'll wait just another second or so. And then I'm going to end the poll. So let's see. We have the majority in Broward. Then we have Miami, Palm Beach. And then we have one for, well, 7%. I don't know if it's one or not from other countries. So I love that. Thank you. Thank you for joining. Another quick question we want to ask, because this is payroll related, we want to know how many people are currently doing payroll for their business. So yes, but you're not sure if you're doing it correctly. Yes, you're doing payroll, assuming that you know what you're doing. And no, but you do take money out of your business for personal use. Or no, period. You're not doing payroll. Maybe you're interested. So we see other people voting, which is great. And I'm going to end the poll in just another second. All right. Good. So let me go ahead and share the results as well. So we have 22% of people that they are doing payroll, but they're not sure if they're doing it correctly. Then we have the yeses. That means that they're good. They're doing payroll and they're good. We have no's, and we have 50% of people here that's not doing payroll. So I would say you are in the right place if you're interested in learning more. So you are in the right place. Thank you for that. Thank you for your participation. It means a lot to us. Now it's my pleasure to introduce our presenter of the day, Mindy Jennings, who's the co-owner and COO of Payrolls Plus. Mindy Jennings graduated FIU with a bachelor's of accounting and an MBA. After passing the CPA exam, she worked at Deloitte & Touche USA for almost 5 years. Seeking to broaden her client-side experience, Mindy Jennings became a controller for a large direct mail company. For the next 14 years, Ms. Jennings dedicated her career to working in consulting and corporate IT departments, implementing accounting, HR, and payroll systems for all size companies. Her experience also includes nearly 2 years of payroll giant at payroll giant Ceridian, a payroll outsourcing company dedicated to large corporations. She started Payrolls Plus in 2004 and has grown it to over 500 clients. Please join me in welcoming Mindy Jennings to our stage. Mindy, please take it from here. Mindy, you could go ahead.
Good afternoon. Let me share my screen Hang on one second. And here we go. So everybody here today, this afternoon, is spending their time to learn something about payroll, employees, or maybe it's just paying yourselves. So as Sidoni said, a little bit about me. You've gotten some of this information already, that I have an accounting degree. I work for Deloitte and Touche. I've switched from accounting into implementing accounting and payroll systems. One of my clients was Precision Response Corp. I worked with for 7 years, and we implemented Oracle there, and we had 12,000 employees we paid, 36,000 W-2s. And then we started Payrolls Plus in 2004 when PRC was being bought out. Payrolls Plus handles anything from paying employees, their tax filings, timekeeping systems, HR. So we can answer lots of your questions, but I know we only have so much time today. So we'll keep it to the topic at hand. And the first one we'd like to discuss is employee versus contractor. So many people think they could choose how they pay their employees. And they hire somebody and say, you're a contractor, I don't need to pay your taxes. But that's not the case. The Department of Labor actually has rules that clarify employee versus contractor. And you are an employee if any combination of these rules apply. There's about 20 of them, but I put only like the top 6. If you tell your employee and give them instructions and they need to do their work based on your instructions, it's highly likely that they are an employee of yours. But of course, it could be a little gray that you might have given them because you wanted them to do something, but they have a little bit of flexibility on their own. So then you have to look, do you set a schedule for them? Do you tell them they have to be there from 8:30 to 5:30? If so, most likely they're an employee. If you provide, if you provide services that are integral to the business, meaning I have one client that is a swimming school. They hired people to do their swimming instructors, but they let them do their own hours, their own schedule, and thought that they would be, they were contractors because they picked when they were actually going to do their training sessions with the parent or the kid. And it turns out that because they provided the pool and it was integral, the service was their main business, they were actually employees. They work full-time for the company. They don't work for any other companies. And they provide all the tools and materials. Those are some of the key ones. There are a few others that you can look at, but if you have a combination of any one of these, most likely you should be paying them as an employee. People do get away with it and pay certain people as contractors because they don't want to pay the employer taxes, but there are ramifications. The ramifications mean you can get audited by the IRS, state, Department of Labor, any one of them can come in. They can go back several years. And then there's penalties and interest on the taxes that you didn't pay for the IRS and the state. And then one agency, when they're done with you, can actually send you over to the other one so you can get it in several different areas. So again, the same client that I was discussing, he truly thought that it was a contractor. And he was referred to us about 10 years ago because the Department of Labor says, no, those are employees. He was lucky the Department of Labor did not go back and tell the other agencies. So we just had to do the unemployment taxes for the last 4 years, but the interest and penalties on them were pretty high and was not very happy. And all it took was one employee claiming for unemployment, and the Department of Labor, the Department of Revenue for Florida said, you never pay any taxes. The kid quit on his own, wasn't eligible, but I don't really have you paying anything. So what they did was they decided to come in and audit him, and the rest was history. And now he's been doing payroll with us for 10 years. It's not a fun thing to go through. And the chances of it happening, we're getting higher and higher. Now with all this other stuff going on, they probably put this on the back burner, but it will come back around again when they decide to, when they have enough resources to do audits again. So I've got a lot of questions on how do we handle interns and contractors. Well, on an intern, when you hire them, you must clarify if they're paid or unpaid. So you might get someone that comes in unpaid, they just want it for credit or service hours, but they have to know this. They can't work for you for several weeks and then turn around and say, oh, by the way, you weren't getting paid for this. They can go back and get compensation. You also, if you're paying them, you must pay them at least minimum wage, and they must fill out all the same paperwork as an employee. So their I-9, the W-4, and so forth, which we'll go over shortly. If they're a contractor and you've determined that they truly are a contractor, they must provide you with a W-9, and you must provide them with a 1099 at the end of the year if they make over $599 in a calendar year. If it's an employee and you're hiring an employee, the key thing you must have for every employee is an I-9. Everyone thinks it's a W-4, everyone thinks it's an application, but no, it's an I-9. It validates that you are an employee, but it validates that you are a valid citizen in the United States to work. You should have a W-4 on file though, because you need to know what the taxes to take out of the employee's check is. But if you don't have them fill out one, it is actually not against the law to do such, but you have to put them as single zero. You cannot put them anything else. They can tell you, I know that they are married. It doesn't matter. If they didn't fill out one of those, you have to do the highest, or the IRS can come back to you and make you pay anything that they would have owed. You should do a background check. It's not required, but the things you find out when you do background checks, they look like the nicest, sweetest person when sitting across the table from you or on a Zoom, but then you find out some shady things they've done in the past. And if you find it out later on and it's after the 90 days probation, you end up stuck with them. Certain states, it's employee at will, so you could fire them like the state of Florida, but they can collect unemployment and it does affect your rate. We will discuss that shortly. Some states do require E-Verify. The state of Florida requires it if you're anyone in the construction industry, but the rest of it, we do not require it. But other states do. California does. There's a few other states that require you to do it regardless of what type of business you are. And that just checks to see that the employee is a valid citizen. If an employee gives you a social security card that starts with a 9, it is invalid. It is a valid social security card, but it's not valid to work in the US. They are probably here on a visa, but it's not a work visa. And then last but not least is workers' comp. Not every state requires workers' comp when you start hiring employees. So the state of Florida gives you up to your first 4 employees. You do not need to purchase workers' comp. But once you hire your 4th employee, you do need to have it in the state of Florida. If you're in construction, you need to have it when you hire 1 in the state of Florida. Other states like California, Connecticut, a whole bunch of them out there, they require it when you hire 1 employee. But some of the states, I can't remember which, was one that's 3 employees, we're 4 employees. So you need to check the state that you're in. Or if you decide to start business in another state, you might be located in Florida, but have an office somewhere else. You need to find out the state rules. Paying an employee, exempt versus non-exempt. You hire someone and go, I'm going to give you $40,000 a year. That's not technically legal. You have to look at the job that they are doing. They're not just based on what you decided it's an hourly or salary position. And when I mean exempt and non-exempt, it's exempt from overtime. You could pay someone salary and say they're $40,000 a year, but if they go overtime and they don't qualify to be a salaried employee, you do owe them for overtime. And if the person is a non-professional position, so like if you're a CPA, if you're a lawyer, you're a manager of several employees, you can be a salaried employee. But if you come in here and you're a paralegal and all you're doing is like research and stuff, you're an hourly employee. There is a full definition on it. You can look up job descriptions on the Department of Labor website to find out if the position you're hiring for is exempt or non-exempt. If they are non-exempt, you must pay them overtime regardless if you tell them they're $40,000 a year or not. If your minimum wage varies by states, you have to pay them that. It's $7.25 for the federal. And if a state doesn't have a minimum wage, you follow the $7.25. If your state has one, like Florida has $8.65, California is, I think, $12.50. No, sorry, California is $13, New York is $12.50, and they change year to year. And by the year 2024, all states are required to go to $15 an hour. Some states require vacation and sick pay. Florida does not, but other states may require you to have it. New York requires sick pay. California does as well. And then there's disability insurance. Some states require the companies buy disability insurance for their employees. The state of New York does, but the state of New York says that you can take some of that cost from the employee. Other states don't, so it varies. Again, the states that do have it. That is less likely. The percentage of states that do require that is much smaller. Paying owners. Everyone thinks, oh, I'm an owner, I don't need to take a paycheck. It's not required. But if you are an S Corp, you are required to take a paycheck. They want you to take a reasonable salary, because years ago, people were just paying themselves via their K-1. They would take distributions, and then their accountant would do their corporate tax return. And on their K-1, they would declare all their income and pay no Social Security, no Medicare, no unemployment. And then later on, they would like to collect Social Security, and they would like to collect unemployment because the business didn't do well and it went under, but they're not allowed to because they did not pay into it. So IRS started cracking down and implementing penalties. That still didn't work. Owners were still doing that. The previous administration implemented, let's do it a different way, and they changed it from penalties to credits. So now you can't get these credits unless you take income. So you need a W-2 under your name to get some of these credits. Your accountant can tell you the best way and how much your income should be. So if you earn $100,000 a year in your business, they're not going to tell you to take $100,000 as a W-2, but they will tell you to take a reasonable salary, and you need to do at least this much to get your credits and so forth. So an accountant is a good person to have in your business. Payroll taxes. Many people go, I get a payroll report and I get all of these things on there and I don't understand what any of them are. So we'll go through them. Your federal taxes, they're paid under the company number. You get this number when you file for your EIN, and you will pay these taxes via a 941. So you pay an employee, let's say $1,000 of payroll, you will withhold certain taxes like federal withholding. This comes from the employee check. The employer doesn't pay any of it. So out of the $1,000, maybe $200 goes to federal withholding. Then there's also Social Security. That's 6.2% of everybody's paycheck, and the employee pays 6.2 and the employer pays 6.2 until they hit 142,800 in 2021. It changes every year, it goes up slightly. Medicare, you also do the same. Employee pays 1.45 and the employer pays 1.45. It does stop. It does not stop, but after 200, you get an additional 0.9 if you make over 200,000 a year. I know everybody on this would love to be in that tax bracket. Maybe some of you are, but most employees don't fall into this. So you just have to be careful of your highly paid employees. FUTA, it is federal unemployment tax. It is required on all companies except for certain nonprofits, but majority of companies and even some nonprofits pay federal unemployment taxes. It is 0.6% of the first 7,000 in wages. It is paid on a 940 at the end of the year, but if you owe over not $500 in a quarter based on what you've paid an employee, you need to pay it quarterly. Otherwise, it could be done annually. Some states have state withholding taxes. New York, California, Georgia, they all have them. Florida does not, Tennessee does not, Texas does not, but you have to find out if your state does. If so, your state website will have a place to file for a state number. Some of them will give you a different number than your unemployment number, your state unemployment number. Some will give you the same, like some states are the same as their EIN number, and some are not. So they're all different, and it's all depending on which state you're in. Florida does not have this. So most of you on the call are Florida, so you do not have to worry about it. But if you do open another state, you do need to check this out. State unemployment taxes required in every state. And if you have an employee in that state, you must be paying that state's unemployment taxes. If you're a brand new company in the state of Florida, it's 2.7% of the first 7,000. After 3 years, they do a look back period and they calculate you've nobody claimed on your unemployment. That's why when you're firing somebody, you want to make sure that they are able to collect unemployment on yours, or your unemployment tax can go up. Unless they're under 90 days, they won't affect your unemployment, or if they've done something wrong, then you're allowed to not pay them. Well, you're allowed to fight the claim if they've done something wrong, like stolen from you, you've written them up so many times, but a lot of states still pay it and it affects your rates. The state of Florida will go down to 0.27%. I'm sorry, 0.29% for this year. Last year it was 0.1. It has gone up because of all the people claiming unemployment. And the highest it can go up if you have a lot of people claiming is 5.4% in the state of Florida. Other states vary. It's New York, I think it goes up to 14,000 you can pay it on, and their rates are much higher than here. If you are, again, having an employee in multiple states, you need a state unemployment number in each of those states. And sometimes it's the same as the state ID, and times they require it differently, but on their state website, you can apply for one. So now that we're done with paying people, this has been a really tough year for a lot of companies. Some have done well, but there's been many like restaurants, event planning businesses, anyone renting tables and chairs for events. They've all been affected very badly. So there's been several things available to them. One is PPP loans, and there's been two phases of them. Phase one, any business can get it. It was forgivable 100% if you used it correctly, whether it be the 8 weeks or the 24 weeks. You had to use majority on payroll. Some of it could be on utilities and rents. Then they rolled out phase two. That is what's out right now. And the only way you get this amount is if you can demonstrate that you had a 25% reduction in gross receipts between comparable quarters in 2019 and 20. So I know that's a lot. So if you look at your Q2 of 2020 and compare it to your Q2 of 2019, it is down 25%. You are eligible for a PPP round two. The other thing that a lot of people don't know about is employee retention credit. You also have to have had a decrease in revenue. In 2020, you had to have been down 50% in revenue to get this. You will get 50% of the employee wages up to $10,000 in wages, which is a $5,000 credit per employee. But it's only the employees. You cannot do it on your own salary or anybody related to you that works for the company. So let's say you have 10 employees, but you are the owner and your son works for you or your daughter works for you. Those 2 or 3 people cannot claim, but the other people on it, the 7 or 8 employees, you can claim up to $10,000 of their wages in 2020 and get a credit back for them. You cannot use the payrolls that include the PPP loan, but hopefully, you know, there's a bunch of you on here that might have paid some employees that outside the PPP loan still made money and you can get a credit back for them. In 2021, they actually made it a little easier. If your revenue was down 20% over 2019, it could be by the quarter or by the year, you are eligible for it. And you might not be eligible for 2020, but you could be eligible for 2021. And it's 70% of the wages, of your 10 wages up to 10,000 in wages. And it's each quarter. So you can technically get $7,000 each quarter. The 2020 was only $5,000 and it was for the entire year. So there's a lot of money out there. We have some restaurants we do payroll for, and they've been doing pretty well with this. They've recovered a lot of their losses for Q2 and Q3 when they weren't allowed to be open. And also, if you were ever asked to be shut down, like closed down like a restaurant, if you could work from your home and be on Zoom and still working it, you don't qualify on that. You could qualify on your revenue going down, but you don't qualify on the being shut down. But I have a restaurant that was shut down for several months, but they reopened back. The end of the year was great, but they qualified because they were shut down. So that's another way you can get additional funds that the government is giving out. And last but not least is grants. They're offered by a lot of local governments. I've spoken to a bunch of people in Broward County that had grants and they're like, no one's applying for them. So there are ones out there. If you needed to help pay your employees to stay afloat, you can go to the Broward County website, and they do have some still available with money out there to spend to keep our economy up and growing. So again, some of you are in other places. You can check your local websites. I'm sure they all have them. The stimulus funds gave each state money to use, and they've passed it down to the counties. And that's basically it. This is my information for any of you to contact me if you have questions on any of this. If you want to know if you're doing it right. I know that we have a bunch of questions right now out there that anyone want to ask, and I will be happy to answer.
All right, Mindy, that was so good. Thank you so much. We do have some questions. Great presentation. Thank you. What I learned is the Social Security one. That was very interesting. If your Social Security number or the employee's Social Security number begins with a 9, that's an indication that it's not valid, or it's valid, but they're not able to work. Is that correct?
That is correct. Some people come here and their spouse comes here to get a job, or they come here with a student visa and then think they can get a job, and it's a 9 in front of it and they can't get a job. They're only here for either because their spouse is here or because they're a student and they're not allowed to work.
That's so important for someone that would be seeking help here and there, and they're hiring someone and they think that everything is legit. They take their social security number and they hire them and never get it checked out. This with the background
Until we
check.
upload the W-2s at the end of the year.
I'm sorry.
Until we upload the W-2s at the end of the year, then they get the notice.
Oh, wow. So that's why it's always good to do. Would a background help with that? How do
The
you know?
E-Verify will help. Background, if you do a background check, yes, they'll check the social security number as well.
Okay. All right. Very good. Wonderful. Also, things I learned. I have a ton of questions. I'm getting to them, but the salary versus the hourly, and that's what the person is doing actually determines the job. That was big as well because, as small businesses, sometimes we try to budget and we say, hey, this is a set amount and it's a salary, and that's what we are, providing. But really, we should look into the job.
Correct. And you can pay them a salary. So like the law firms will pay their paralegal a salary but they have to stay under 40 hours. The minute they go over 40 hours, they don't want to sit and nitpick and tell them, well, lunches. So look, you're getting paid for this, but if you end up working overtime, I need to know that and I'll pay it to you. So it's not really salary versus hourly. It's more of if you're exempt or non-exempt from overtime. So you can't tell someone I'm making you work 80 hours a week for $40,000 and your job description doesn't qualify for that. So it's 40 hours or less per week. In the state of Florida and California, actually, it's by day on certain positions. And then on weekends, it's sometimes double time that they have to get paid.
Okay, great. All right. So on to our questions. First question is, how do I pay myself as a sole proprietor?
You can either do it yourself and on QuickBooks. You could hire a payroll company to do it like we do. Some clients, what they do is they don't really pay themselves. They'll just say, I need to do a 941. And the 941 will put your account will say take 10,000 a quarter. So you'll put 10,000 in for the quarter. You'll do a calculation of this much federal, social security, and they'll pay it with their quarterly returns. That's if they're not doing payroll regularly. Others will say, I'd like to do payroll regularly because I want it to be spread out for the year. I don't want these big amounts owed at the end of each quarter. So they'll actually calculate a payroll and they'll do it monthly. And payroll companies will do it for you. You could do it through QuickBooks. And then at the end of the quarter, a 941 needs to be filed for all of those. RT6 for the state of Florida, that's the state unemployment tax. Each state has their own. If it isn't a state that has state taxes, those state returns need to be filed quarterly. And at the end of the year, the 940, which is the federal unemployment return, needs to get filed for the federal unemployment taxes, and then your W-2s. So it's a lot of filing to do and do that, but it qualifies you for credits when you do the returns. If you don't do it and you take all your income on a K-1, certain credits you don't get.
Okay, interesting. Thank you. How do I set up my account to pay taxes in Florida?
So your EIN number will give it to you. So you just start paying yourself, and you can file a 941 and they already have your EIN number on file. On the RT6, you have to go onto the Florida Department of Revenue website and register with them. It creates an RT number, which is a 6-digit number we use to file, and your rate will be 2.7 for the first 3 years. So whatever system you're using to calculate it, let's say you don't hire a payroll company to do QuickBooks, you need to go in there, set up a state unemployment tax with a rate of 2.7 on the first 7,000. And QuickBooks, I think, is pretty reasonable to shows you how to do that. And then, but you have to file everything yourself on the quarterlies. If you hire a payroll company, they will do it for you.
Okay, wonderful. This one says, I hire a lot of temp. What forms do I need to hire my temporary employees? What do they need to fill out?
Just like an employee does, you need to do an I-9 for them to make the valid to work in the United States. You should get them to do a W-4 because you need to know the taxes to take out on them. You should do a background, but you're not required to. I mean, if they're only coming in for couple of months and they're not doing anything that you feel that could be harmful for anyone else, then you don't have to do the background check. But the I-9 and the W-4 are probably your two key forms. Your I-9 though, when you get those for each employee or each temp, should be kept in a separate folder, not in the employee file.
Okay, great. Good to know. Someone's asking if you could review the sick and annual leave regulations in Florida again. You had a
There
slide.
are no rules for Florida. So Florida is an at-will state. You do not have to offer an employee vacation or sick time. It's not required. If you do, and you put it in your employee manual, or you tell your employees when you hire them, you need to be consistent among your employees. You can't say you have vacation and you do not, unless one is like a manager, and running around, and the other one's a part-time employee, then you can. You can say part-timers don't get it, but you have to be consistent with your employees. You could be in trouble with the Department of Labor. But if you don't offer it, it's not required in the state of Florida.
Okay, great. And I see some pop-ups going in the chat, but I'm really focusing a lot on the Q&A. It helps me to actually navigate and go through. So if you don't mind putting your question in the Q&A, that would be great. I have another question. It's asking, where can we find a chart, a breakdown on payroll taxes for the state of Florida?
Well, there are no taxes per se for the state of Florida. There's no state tax. There's only unemployment tax, and there's no chart for it. It depends on how long your company's been in business, how many people have claimed unemployment. So when you start out as a new employee, whereas you hire a new employee and you're a new company, it's 2.7% of the first 7,000 in wages. So you pay that, and then every year you do this. So let's say the person hits 7,000, you stop calculating that and paying that. Next year starts all over, you do it. When you hit your third year, you'll get a notice from the Florida Department of Revenue that says, oh, you've not let anyone go. Your rate has dropped to this amount. Again, if you let nobody go, nobody's claimed, or you might have let people go, but nobody's claimed, it will drop as low as 2.29% up to on the first 7,000. If you've let people go, and like this economy and everything that's happened, your rate could go up as high as 5.4%. But there's nowhere for you to look it up. The Florida Department of Revenue has to tell you what your rate is. And then the federal taxes, they're standard. They're for every state, and they're what I put on that slide.
Okay, very good. Thank you. Someone's asking about the PPP or EIDL. How does the PPP or EIDL relate to those who are independent contractors who are not registered as a business?
You were allowed to get the EIDL. I'm not sure they were giving it for that, but the first round of PPP, if you file like a Schedule C on your 1040, you qualified to do that, to get the first round of PPP. You just needed to fill out the form and use your income, your corporate income, and show that you've paid yourself, and this is how much I paid yourself, and then they divide by the the 8.5 weeks to give them a calculation. So it's still applicable to do that. It's just a different form. They ask for information and calculate it a little differently than a company does.
Okay, very good. Thank you. I applied for unemployment and was declined for the reason that I did not file in the state during the year. I take a distribution on my taxes. How do I make the change so that I would be covered by unemployment in the future?
If you're in the state of Florida, you have to obtain, well, if you're in any state, you have to obtain your unemployment number and pay unemployment taxes for each person that you're employing. Yourself, if you hire a temp, you pay for them. So if they ever leave, or your business is shut down because of COVID or anything like that, you can go claim because you've paid unemployment taxes.
Okay. And this is a great question. And the reason why there's so many small businesses that they were applying for unemployment and they got denied for this reason, because they are taking a distribution or they're not paying payroll taxes, unemployment taxes. And a lot, certainly, I'm pretty sure a lot came to you within COVID, the time frame, just to start doing payroll because they didn't understand even the forms,
Yeah.
People,
we had a lot of people that came to us because they also didn't know what to do for the PPP, and they were paying themselves before by themselves, and they didn't know how to get this rectified. So we helped them get it organized and give them the payroll documents they needed for the PPP.
Okay. All right. Wonderful. Thanks. Question here is asking about how does it work with an S Corp? Could you open a DBA under an S Corp, and would that be taxed independently for the S Corp? sorry. So let me read it again. How does it work with an S corp? Could you open a DBA under the S corp, and would that be taxed independently from the S corp?
So
Maybe
if
from
you're
the
set up as if you're set up as an S corp, that's your business. You could have 20 million DBAs. It doesn't really matter, but you're filing taxes under one EIN number, and that EIN number is how you're set up to pay taxes. So you could have different divisions, different locations, and so forth. But EIN, you have one company, one 941 is filed each quarter. You have one corporate tax return is filed for that EIN number. So if you want one thing separately, you wouldn't do a DBA, and you wanted it, you'd need another EIN. And an S corp is that's where we're requiring an owner to take a paycheck. So I'm not really sure of the question so much, but if you're trying to do something separately under a different DBA, it's still under the same taxes.
Right, because DBA is not an actual entity, it's just doing business as, so you can have one main company and 5 DBAs, so to speak. At the end of the day, you have one EIN number and you'll file under that EIN number. Am I correct?
Right, you could, correct. If you have like XYZ law firm, but you have a location over here and you want to call them each something differently, you can, so you could say Las Olas law firm and Davie law firm and Miami law firm. So you want to call them that, but it's all under one EIN number. It doesn't matter. All of that's going to be filed on the one tax return on the one EIN number. Or you create different businesses with different EIN numbers for each one of them.
Right. Okay, great. There's another question. What happens with 1099s? If your company hires mostly independent contractors, do you need to use E-Verify on them as well?
No, not on contractors, but I mean, not on 1099 subcontractors. You just got to make sure that they are validly subcontractors, because sometimes you think they are, as I stated on the slide, but you have an employee that claims unemployment. They're not eligible because they're a contractor, but now they've caused an audit and they come in and they go, oh, they are. We have another one that's home health agency, and for years they got audited several times because they said that they're contractors. These people work for several different agencies, therefore they're not working for us, alone. And for years it was fine, but last year one of our clients, the Department of Labor, says they're now employees. We have to switch them all to employees, and they had over 100.
Oh, wow.
Yeah.
Okay. There's a follow-up question to this. They're asking if they need to file unemployment taxes when they have only 1099s and less than 4 W-2s in Florida.
Yes. If you have any W-2s, as long as it's a 1099s don't affect you at all. You do not file, if everybody's a 1099, which is usually impossible because somebody's running the business, but everybody, the 1099s don't count. But the minute you have one W-2, you have to file tax. You have to file and pay taxes and have unemployment for your employees. Okay. Unless you're a nonprofit. Nonprofits do not have to pay on certain unemployment taxes, and it depends on what type of nonprofit you are.
Okay, great. And I think this was a follow-up question. I think we answered it already. They were asking if the DBA needs its own EIN number.
DBA's not. It's doing business as, and you can have 1 million DBAs. If you set up a company with its own EIN number, it's its own company. But again, you could have a law firm called ABC Law Firm, but then each of their locations is called something different, DBA, but it's the same EIN number. That you could have a ton of them, or you have some of these franchises. Most of them will set them up individually because they want them individually in case they ever want to sell them off, and the liability and so forth. But some people create one and then open up a bunch of others and just open up different locations, make them a different department and division and a different DBA, but they're under the same EIN number. So it depends on how you set it up or your accountant set it up. But DBAs usually don't have their own. They only have their own EIN number if they were created as a whole new company.
Okay. Could you go over the stimulus information again, and whether or not the 2020 versus 2021, and whether or not someone would be approved for it if they had PPP or not? You had a slide on it. It'll be nice to bring it up.
I just did. The employee retention credit we're talking about?
Yes.
So prior to December 20 something, if you got the PPP loan, you could not take the employee retention credit. On December 20, whatever the date was, Trump went in and said, you know what, you could have it. So now you were able to get the employee retention credit, and then they extended the credit into 2021 for till March 31st, and they upped it to 70% for up to 10,000. So then the new administration that just came in, they took it from March 31st and extended it through the entire year. So, and did it by quarter. So the way it works is some people aren't eligible to get in 2020 because they weren't down 50%, but they are eligible for 2021 because they are down 20%. So take Q1 of 2021, and if it's less than Q1 of 2019, you're eligible for it. So if you're down 20%, also if you were closed down, you were eligible for it. So you can get the 20% and you can get the 70% of the first 10,000 in wages. So let's say you have 10 employees and they're all employees, not the owners, and they each got paid 10,000 each quarter. You're going to have 10 employees of that. It's $100,000. You're going to get $70,000 back, as long as there was no PPP loan 2 on that one. You didn't use any of those wages for PPP 2, or you didn't do any sick pay. So back in April, if you had employees that were sick, the government would pay for the sick pay. They would also pay for family leave. They'd also pay for you to take care of somebody. So if you took that on any of your quarters, you can't use that either. So if a person made 10,000 and part of it was PPP, you've got to back that out. If some part of it was the Family Cares Act sick pay, you have to back that out too. If none of that was used and your quarter was fully paid, you get 77,000 per employee. If you've paid them over 10,000.
Mindy, we're so happy to have you. That was a lot.
Thanks. It's a lot, and a lot of people don't understand, and they'll call back several times. Go, okay, repeat again, because it is a lot. And it's one quarter is one thing, 1 year is another, and you have to be down on some like PPP loans. Phase 1, you don't have to be down. Anyone can get it. Phase 2, you have to be down, and it's by or you have to been closed, and it's by quarter comparison. And then the employee retention, it's 50% 1 year, 70% another. It's crazy, and it's a lot of information.
Yes. Can you speak a little bit about 401ks or self-employment, insurance, all of that in terms of deductions? I'm sorry, on your payroll, how does that work? So if they're either paying them, so say someone that's paying themselves and they want to pay their medical and also give themselves, do a retirement plan. How does that work for payroll?
You could set up the small 401ks, or some of them do simple IRAs or a SEP, and they can pay into those, and it's just reported on your 941. You back it out, and then on the SEP it's not, but on a simple IRA or a simple 401k, you could it's put on one of your boxes of your W-2 if you're doing it yourself and using, let's say, QuickBooks. You set it up and it shows up in the right boxes. You just need to find a company that does it. Like some of the companies that will do small ones are like John Hancock, PAI. Who else does small little ones? I'm trying to think of American. There's American something or other. They do a bunch of these 401ks, and they'll do it for small business owners and set them up, and you can put them on your W-2s and your 941s and take the credit. On the health insurance, though, you need a 125 plan to do that, and you really can't do that for owners. So, but you can, if you're paying your own, you're allowed to take, since you're self-employed, you're allowed to take it on your 1040, your health insurance.
Okay. All right, good to know. We have 3 more questions, it looks like. How do I set up to pay unemployment taxes for a new LLC sole owner, and may want to move to take in contractors later on? So I guess the first part of the question is, how do I pay unemployment taxes for a new LLC sole owner?
You can pay taxes for anyone can pay taxes for their unemployment on their state website. they'll give you a log on. So once you apply for it, you could ask to have a log on, and then when you log on there, you can enter everything online if you're doing it yourself. If you're doing it through a payroll company, they'll upload it and pay it for you. But if you're doing it again, the Florida Department of Revenue website has, if you look for unemployment taxes, and you actually assign yourself one, it'll send you back and then say, you'll get a letter in the mail to say, this is how you log on. And once you log on, it gives you a screen and you put in each of your employees. It tells you what your rate is. It'll calculate it after you put in each person. It'll even stop. So if you say Jane Doe made 10,000 Q1, it'll know to stop at 7,000 in calculation. The next time you put that money in for that person, it'll say nothing's owed for that person for Q2 because they passed 10,000 in Q1. So the website is very intuitive and very easy to use. And then it'll take your payment there as well.
Okay. Thank you for that. And then the second part was asking about contractors, but we know that we don't pay unemployment taxes for contractors. They just get 1099s.
They're responsible for that on their own. They're their own business.
All right, another question. Can you pay yourself if you have two owners working for the business?
Of course, yes.
Yes, how can you pay yourself? And I think you went over this a few times. Yeah.
Yeah, everybody does it differently. When you're starting out, some people will do it on their own. We've had some clients that did it on their own and ended up with tax penalties because they didn't know when taxes were due. So then they go to a payroll company. Most of them, they're pretty simple. They're easy to do if you know what you're doing. But if you don't know what you're doing, I do suggest you get somebody to help you. Accountants will charge you more than a payroll company. And most accountants don't like doing them anyway. But sometimes they'll offer, if it's an accountant that does small businesses, they may do it and they may give you a discount for doing it with your corporate tax returns. So you could check that out. But if you do know what you're doing, then you can use QuickBooks or something to pay yourself. And then you could upload either upload or manually enter the unemployment taxes online and mail in your 941 each quarter.
Okay. All right, great. And the last question we have here is what documents or forms will prove that you had a 70% down on that employee retention credit?
Well, you don't have to be 70% down. You have to be 20% down in 2021. And you just basically need to show hopefully you're keeping books. I don't know how some people, QuickBooks, Peachtree, Zen, there's new ones out these days. Mm-hmm. Any way you're doing it, show your Q1 of 2019 and your Q1 of 2020. And if that's not down, maybe it was your fourth quarters that were down that you have to compare. You could your Q4 of 2020 compared to Q4, whatever it was, take those two. And if you're down in revenue for the quarter, that's usually enough backup.
Okay, very
And
good.
if you're shut down, you automatically get it. So all restaurants that got shut down this summer and couldn't open, they get shut down. A law firm can't say they were shut down because they could still do business via Zoom, online. They still were doing things, but restaurants or anyone that was told they were not allowed to be open and have people in their store, like boutiques, any of those would qualify.
Mm-hmm. And you mentioned earlier, like people in the event industry, hands down, those would qualify, whether Correct. You would do an event within that time frame and that was your revenue, or you planned event for other people, mm-hmm. regardless of what. You
can't do it. You're shut down. You're told you're not allowed to. If someone wants an event, you still can't do it because they're not allowed. So you are shut down. But on the employee retention credit, it's only on the employees. If an owner gets income, you don't get that credit on the owner or any of their family members.
Mm-hmm. And I guess that's the important part, the important point. It's on the employees. It's if you pay your employees, not that it's for your own, employee, right. for yourself.
Correct.
All right. I don't see any more questions. I was scanning the chat just now just to see if there are any more questions. If I missed any, I am sorry. Mindy, this was very good. I don't see, let me see, I think one more came in and then that would be our last question in terms of time for the day. So the follow-up. So the follow-up will be, can I just get my unemployment taxes deducted when I am doing my business tax or personal tax 1099 at the end of the year?
If you have a domestic employer, you could do it that way. State unemployment is quarterly. You have to do it quarterly. Uh, no, unless you're a domestic employer where you hire someone to come work in your house, then you can do it on your 1040 that you paid them, the employee, and then and pay all your taxes. But an actual business, no.
Got it. Well, thank you again. This has been great. I'm going to launch one other quick poll just for feedback. I had a really good time today, and I just really want to know, how does everyone feel about the topic and what we presented today? We want to continue to bring relevant topics like we said. So we just want to make sure that we're doing that. And if you ever, a lot of times I get these topics from when I'm talking to clients, and I realize that there's a need. So if you feel that there's something that will be helpful, sometimes you could send me a message and we'll evaluate in our events and workshop committee. We'll talk about it and we could go. So I'm going to end the poll right now. And hands down, we have very helpful and extremely helpful at 75%. I thought so too. I just wanted to check. Thank you.
Good to hear.
Absolutely good to hear. So just bringing you back to Black Swan, basically, if you need any information on the company, feel free to check us out on our website, consultblackswan.com. If you're on my email list, I send out all sorts of information, any grants that I find, anything that's going on locally and even nationally. That's what we try to do, bring you relevant information for your small business. The next webinar we're still talking about, I am actually planning on doing a hands-on workshop with some of the clients that I already currently have. So maybe smaller groups, 6 to 10, and we complete a task. And by the time we're done, something is actually done. So for instance, maybe creating a capability statement or probably doing their business model canvas or something like that. We're still talking about it. The point is we have a lot of plans continuously for you just to try to bring you relevant information, obviously experts in their field. We are happy when you join us for lunch and we want to give you back your time for your day, but we want to make sure that you have gotten something that you could take and apply to your business, especially if it's a small business. This can apply to a small business, medium-sized business. If you're not doing payroll for this topic, if you're not doing payroll, then I'm hoping that you've learned something today and you will make a change for the better, or at least make plans on making that change. So Mindy, thank you so much. Thank you for your time, your expertise. And I'll tell you guys, Mindy's my personal payroll company. I said she, but she has a whole team that's so good. And they've certainly gotten me out of any kind of trouble that I could have been in. So you have, hands down, Mindy's been helping me and I really appreciate that. So thank you. In the background, Black Swan team, Patrice Wiggin, you've been doing a great job. Thank you so much. Everyone, you get your lunchtime back. Have a wonderful, wonderful day and see you next time.